Welcome back. You're watching us here on Bazaar Morning Call. In case you've just tuned in, the overnight cues were mildly positive in the US. Today, the US markets are shut. And the forward indicator for our markets, the GIFT Nifty, is indicating a mild positive start as well. A bunch of stocks in focus. And we have with us Mehraboon Irani to tell us about his likes and dislikes in the market as well. Mehraboon, we had a lot of Q1 updates coming in. Bajaj Twins stood out, Bajaj Finance. And DMart as well saw a growth after a long time, 18% revenue growth year on year. Between these two, how would you play? Because valuation's not particularly cheap for either of them.
I think you answered the question itself and quite well. I would have said the same thing, and I'm saying the same thing, that DMart numbers quite good. But at the present level, do I go and put in some more money? So the incremental money part, I don't think I will be in a hurry to go and buy into it. I think DMart has been a great company, most efficient, very efficiently managed. But I have had reservations on the valuations for the last over 3 years, and I was ready to put in my bet and say that this stock is not going to give you money. But as a shareholder, telling somebody to go and sell it off just because it's expensive was not very easy. So this is a stock which has underperformed in a big way for the last 3 years just because of its valuations. And even at the present level, despite the numbers which seemingly look good, I would not be in a hurry to go and put in more money. As far as Bajaj Finance goes, more or less the same rationale. I think the good part is the deposit traction has come back. The loan growth has been very good. This is again a great managed company. I think one of the possibly the best in the NBFC sector. And that is why it is having rich valuations. But again, in a market which has gone up one way, and even the frontline indices are going up right now, thanks to the HDFC's Twins, Reliance, and ITC yesterday. I think I would not put in incremental money again into a stock like Bajaj Finance. From a trading angle, yes, it can possibly notch up 3, 4, 5% gains. I'm not ruling it out. The numbers were good. It makes you feel that things are coming back into fine fettle as far as Bajaj Finance goes. Even M&M Finance numbers were good. But considering the monsoon aspect, which I'm still not very clear, are we going to have a good monsoon or not? I would not like to depend on too many names like an M&M Finance, which also depends a lot on rural income. So all the three names, good numbers, the review numbers are good. We are going to see good results coming from them certainly, but not in a hurry to go and put in incremental money in any of these three names.
Mehraboon, I mean, if you are a viewer with IDFC First Bank shares, what is the recommendation now? The swap ratio has been announced in favor of IDFC compared to where prices left off yesterday. You hold on?
Well, yesterday the way the share price moved up ahead of the announcement was a clear indication that whatever is going to happen is going to be in favor of IDFC shareholders. And if you were an IDFC shareholder who had sold off, saying that the news is going to come, but it's not coming, just a few days away, you would have felt very stupid yesterday, at least late evening when you announced the ratio. The ratio is clearly in favor of IDFC Limited. Now the point is IDFC first. Is it a well-managed bank? I think one of the best CEOs it is having in the banking industry, no doubt about it. But the stock at 80-81, I think is certainly not very cheap, at least not for the moment. And with the ratio now coming in favor of IDFC Limited right now, I think the point is, are we going to see IDFC Limited share price go up further, or are we going to see IDFC Bank shed some weight? It's possible that it could be the latter. I'm not ruling it out, because 80-81 itself for the time being looks a little bit expensive in terms of valuation. Whether this could be a 100 rupee stock or 120 rupee stock in the days to come, I'm not ruling it out. But at 81, if this ratio was not announced, and you would have asked me, Prashant, the question is IDFC Bank should be bought at 81, I would have said, okay, it's gone up a little bit too much. Let us shed 10-15% weight and then possibly go and buy into it. So with this ratio coming in favor of IDFC Limited, certainly there could be some selling coming in IDFC first. That's my view. Or otherwise, you could have an IDFC Limited go further. So either which way, IDFC Bank is a stock which, if I was holding the share and if I was looking at it from a very short-term angle, I would be in a hurry to possibly come out of it and look at buying opportunities maybe 8-10-15% lower from the present price, despite it being one of the better managed banks with a decent CEO in place.
Mehraboon, the other one in terms of news flow is Hero and the model they've introduced, the Harley bike they've introduced, and the pricing, which is very competitive to Royal Enfield bikes. What does it mean? I mean, Royal Enfield is a leader in the 350cc plus category with 90% share, so they've got the most to lose. Tomorrow we will get pricing from Triumph, Bajaj's Triumph as well. That's a 400cc bike. If you own Eicher, what's your sense? I mean, would you give it a relook? Would you reassess, or be happy holding it?
Yeah, I would be happy holding it, and I would not be too much affected by what Hero is doing right now. I think, again, if I was managing a 2,000 crore fund, which I'm not, I think, and if I had to put in money into a couple of the stocks, would Eicher Motors qualify? Again, not from the incremental money angle, but if I was holding it, I would not be too disappointed or too worried about what Hero is doing. Coming to Hero, I think this is a stock which possibly needs a few more triggers for the stock to perform. I thought this has been a rank underperformer in this segment. Now, coming back to the overall two-wheeler segment, if you ask me, I would say that even the performance which came for the month of June, I think was very mixed. And the disappointment was in the entry-level segment, which normally you see a lot of traction happening over there. It was rather muted this time. So I don't think I would be too excited about what Hero is doing, despite the fact that, as I mentioned, that somewhere relatively the stock looks undervalued in the two-wheeler segment. And as far as Eicher goes, well, it is Eicher. It has always commanded a premium valuation. So this news is certainly not going to prompt me to go and sell into Eicher. But I would take a relook overall, because again, this is something in which I am a little concerned. I mentioned that the last time I was on your channel, I mentioned about the white goods sector, that I see demand coming off a little bit. And the same thing possibly could happen as far as the two-wheeler segment goes. Again, if it could be further accentuated by the fact that if we don't have a good monsoon coming. So on the whole, not too much of expectation from this sector, and the Hero announcement is not going to make me go and sell into Eicher Motors. Coming back to your question.
All right, Mehraboon, always a pleasure speaking with you. Thank you for joining in with your perspective on a whole host of stocks. But